Some of the hardest audits aren't the ones with fraud or fancy schemes. They're the ones where the taxpayer has nothing. No ledgers, no receipts, no access to the QuickBooks file they thought they owned. It happens more often than people realize. A small business hires a bookkeeper, sometimes the same person who does their taxes, and hands over everything. Bank statements, check copies, maybe a box of invoices. The bookkeeper nods, says they'll handle it, and at tax time the client signs the return. They assume the numbers came from somewhere real, until the IRS calls. That's when the panic sets in. They reach out to the bookkeeper, no answer. Try to log into QuickBooks, no access. Ask for a copy of their records, silence. I've seen it across trades: plumbers, roofers, painters, general contractors, people who worked hard, pay someone they trust, and end up with nothing to show for it. They didn't try to cheat, they just trusted the wrong person, and it left them defenseless when the audit letter arrived. One case stands out: a self-employed electrician who'd paid a bookkeeper-slash-tax-preparer for 3 years straight. When I asked for his records, he looked stunned and said, "I thought she had them." All he had were 12 months of bank statements and a shoebox of receipts. No ledger, no income summary, nothing tying the numbers on the tax return to real life. That was the moment I started realizing something. Not every messy audit starts with bad bookkeeping. Some start with bad boundaries. And when those boundaries break down, so does everything else. When you work in audit long enough, you learn to tell the difference between disorganization and disaster. Disorganization isn't when receipts are messy but exist somewhere. Disaster is when the taxpayer doesn't have or can't get anything at all. The electrician's case was the second kind. When I explained that we needed supporting documentation for income and expenses, he said, "I'll have to talk to my bookkeeper." Later, he would tell me that the number was disconnected when he tried to call and emails went unanswered. He'd been paying her by direct deposit every month for years, but never seen a financial statement. She'd filed his tax return, collected her fee, and kept the books on her own private QuickBooks account, an account he never had been invited to view. That's where reconstruction begins, not with numbers, but with absence. In the IRS, we call this bank statement reconstruction, rebuilding a year of business activity using nothing but bank transactions, third-party data, and the occasional crumpled receipt. It's time-consuming and rarely perfect, but it's often the only option. I started with his deposits. Contractors live on checks and electronic transfers, so I sorted every credit that looked like client payment. That became the gross income. Then I categorized the debits: fuel, materials, equipment, insurance. Some were obvious, others needed context. A transaction labeled Home Depot could be business or personal. Without receipts, I had to ask. He didn't always remember, and that's the problem with reactive bookkeeping. By the time the questions matter, the answers are months old. I built what I could, line by line, documenting every assumption. It wasn't perfect, but it was defensible. About halfway through, he stopped mid-call and said, "So I paid her all that money and this is what I get?" There wasn't much I could say. Bookkeeping isn't like an oil change. You can't drop it off, forget it, and assume it's running fine. You need visibility. Otherwise, you're trusting someone else with the evidence that proves your business exists. I see this mistake all the time. Business owners think having a bookkeeper means they're protected, but here's the truth. If you don't have copies of your ledgers, bank reconciliations, and year-end reports, you don't have records, you have a dependency. When a taxpayer provides only bank statements, I can build a basic picture, enough to estimate income and allowable expenses. But what I can't recreate is intent. I don't know which purchase was personal, which was mixed use, which job a deposit belonged to. That lack of context leads to disallowed expenses and higher taxable income. Not because the taxpayer did something wrong, but because there's nothing left to prove what's right. By the end of the reconstruction, the electrician owed additional tax, penalties, and interest. He wasn't happy, but he stayed cooperative. He said he'd never hire another bookkeeper without getting a monthly report and a backup file. He started using a cloud-based system where he could log in anytime and see what was happening. I consider that a success. Other taxpayers don't take it that way. Some start out responsive and disappear when they realize what the corrections mean. They ghost emails, skip appointments, and hope silence will make the problem go away. It doesn't. The system keeps moving with or without them, and what could have been a manageable adjustment becomes a full-blown liability. Those are the cases that stay with you, not because of the money, but because of how preventable they were. If someone had just explained early on, get your own copy, keep your own records, don't sign what you don't understand, most of these audits would never happen. When you rebuild books from nothing, you stop taking organized chaos for granted. You realize how fragile proof really is. Every transaction you can't explain becomes a hole in your defense. That's why I tell every business owner the same thing. Bookkeeping isn't a service you outsource and forget. It's a language you should still understand even if someone else is speaking it for you. The electrician's case closed eventually. He paid what he owed and moved forward. But the lesson stayed with me, and I hope it stays with anyone listening. Don't confuse delegation with detachment. The IRS doesn't audit your bookkeeper, it audits you. Every audit teaches you something, but the reconstruction cases always left a mark. They weren't about greed or fraud, they were about trust. Trust that someone else was watching the details, and that misplaced trust usually costs more than any penalty. I'd finish a case like that and think, how did this start? The pattern was almost always the same. A business owner trying to do the right thing, overwhelmed, handing everything to someone who promised to take care of it. They didn't ask questions, they didn't check reports, they just wanted it off their plate. Years later, when the IRS letter arrived, the silence from that bookkeeper or tax preparer was deafening. That silence has a cost. Financially, it's obvious. Additional taxes, penalties, hours spent recreating receipts. But emotionally, it's heavier. There's embarrassment, frustration, and that quiet anger that comes from realizing you paid for peace of mind and got chaos instead. I've sat on calls where grown adults sounded defeated. They'd say things like, I trusted her, or I don't even know what my books look like. All I could think was, this could have been avoided with one monthly report and a backup file. Here's what I wish every small business owner understood. A good bookkeeper is transparent. They communicate. They send you copies of your reports and explain what they mean. They'll invite you into the accounting system, not lock you out of it. And if they also prepare your taxes, they'll be clear about what's bookkeeping and what's tax prep. Two different jobs that require two different sets of eyes. Red flags to watch for? Vague updates, excuses about why you can't have access, or promises that sound too confident. Don't worry about it is never a professional answer. If you're listening to this and thinking, I don't have access either, make that your first call tomorrow. Ask for your QuickBooks login, your Excel file, your reconciliations, whatever system they use. If they can't or won't share it, find someone new. Your books are your responsibility. Delegation doesn't mean disconnection. Some taxpayers in these cases did everything right once they realized what had happened. They hired professionals, set up cloud backups, learned to read their own financial statements. They treated bookkeeping like part of management instead of an afterthought. Those businesses recovered. Others vanished. They stopped returning calls once they understood how much they owed. Maybe pride, maybe fear, but silence doesn't stop interest from accruing. The IRS will always finish what it starts. That's the part that still gets me. The way fear makes people disappear. Most of them weren't dishonest. They were just exhausted. They trusted the wrong person and didn't know how to face it. I always wish they knew we could have fixed it if they stayed. If you're running a business, here's the key takeaway. Hire the right people. Someone credentialed, insured, and willing to explain what they do. Ask questions, even if you feel silly. Keep your own copies always. You don't need to be an accountant to protect yourself. You just need awareness and boundaries. Bookkeeping only breaks down when communication does. And once it does, it takes time, money, and patience to rebuild. But it can be rebuilt if you stay involved. The electrician's case wasn't unique. Neither were the contractors, the shop owners, or the food vendors who came after. They all taught the same quiet lesson. No matter who you hire, the IRS will still hold you accountable for your own records. Next time on Audit After Hours, the tone shifts again. We'll step into one of the most difficult cases I ever worked, the one that kept me up at night. It's about the emotional cost of compliance. What happens when the numbers are correct, but the impact still hits hard? When I closed my last reconstruction case, I realized something simple that I'd missed at the start of my career. The paper trail doesn't belong to the IRS or to your bookkeeper, it belongs to you. The files, the receipts, the ledgers, they're not just compliance tools, They're the evidence of your work, your hours, your effort. Losing access to them means losing your own story. I used to think bookkeeping failures were about numbers. Now I know they're about boundaries. The moment you hand everything over without checking in, you hand over control. And when that trust breaks, it isn't just a financial setback, it's a confidence break. If you're listening to this as a small business owner or self-employed professional, here's what I hope you take away from this episode. Always know where your records live. Always get copies of what you've paid for. And never sign a tax return you don't understand. Ask questions. Real professionals will answer them. The wrong ones will deflect. That difference can save you years of stress. I'm Lauren, a former IRS agent turned bookkeeper, and this is Audit After Hours. Next week, we go deeper, the one that kept me up at night. A case that had the right numbers but left a lasting impact. It's a story about what compliance costs emotionally and what it really means to carry someone else's financial truth. When the office lights go out, the audit stories begin again next week. Audit After Hours is a Zero Fluff Books production written and hosted by me, Lauren Twitchell, a former IRS agent turned bookkeeper. This mini-series was created to pull back the curtain on what really happens inside small business audits, and to remind you that understanding your numbers isn't about fear, it's about freedom. Production support, editing, and post-mix by the Zero Fluff Books media team. For free resources, bookkeeping tools, and upcoming podcast updates, visit zerofluffbooks.com or find us on Facebook, Instagram, Pinterest, and YouTube at Zero Fluff Books. Thank you for spending this season with me, for listening, reflecting, and proving that the story behind the numbers always matters. Until next time, keep your books clean, your receipts handy, and your confidence high.